On Wednesday, Jerome Powell, the chairman of the Federal Reserve, spoke to Congress in one of his mandatory appearances. So in this video, we are going to go over a couple of the things that he talked about, including the Fed's balance sheet, interest rates in light of two things, inflation and the Russian invasion on Ukraine. Ready? Let's dive in. If you want the cliff notes, basically Powell told Congress we're no longer expanding the balance sheet. Interest rates are definitely coming. If inflation persists, interest rates will be more aggressive. We'll start selling off our assets off our balance sheet even more aggressively. And the only thing that could change this is the massive uncertainty with what is going on with Russia and Ukraine right now. If there are big risks that start unfolding, they might have to reverse course or change their course. Got to plant those seeds. All right, let's dive in detail here. So the first thing Federal Reserve Chairman Jerome Powell said to Congress was that they have ceased their net purchases of assets now that it's March. So he's saying we've stuck to our plan, we've tapered our purchases, and now our net addition to our balance sheet is zero. I've said this many times before, but I think it bears repeating one last time here, that the balance sheet, since there's no net purchases, that doesn't mean they aren't still purchasing assets, because if they have no net purchases, they're not yet letting their balance sheet decline. That means they're replacing anything that matures. With treasuries, with the United States government bonds, this is an automatic process, but basically it's like if you borrow $100 from grandma and you say, hey, grandma, I'll pay you back your $100 at the end of this month. The end of this month comes, you don't have your $100 anymore. So you go to grandma and you say, I will pay you back that $100 just like I told you. I promised you I'd pay it back. I also need another loan of $100, so give me that first. Okay, now that I have this extra loan of $100, here, I'm going to pay you back that $100 that I owed you. So that's called rolling over the debt. You're borrowing new debt in order to pay off the old debt. That is exactly what goes on when the Federal Reserve rolls over its existing debt. As treasuries mature, there's an automated process there whereby they just literally loan out to the federal government the exact amount that was paid back, that matured. Now, again, it's not direct. It goes through the banking system. It goes through the open market system. So it's not direct, but it doesn't matter if it's not direct. That's still what's happening. They're just replacing all that debt so the federal government doesn't actually have to pay it back. So until they start selling assets off of their balance sheet, until they start letting their balance sheet decline, this process will continue and their balance sheet might move up and down a little bit from week to week, but it will be moving sideways on net, won't be growing or declining. Now that they've concluded their asset purchases, they are going to be raising rates. Again, as long as the global financial system doesn't start to implode as a result of some unexpected thing happening, massive financial institutions in Europe getting knocked over as a result of the bank runs and the sanctions and the missed payments and all that, as long as something massively unforeseen doesn't happen, they'll start raising interest rates this month. Powell told Congress that it would be at 0.25% each time. That's 25 basis points, 25 bips each time that they raise their rates, and they will stick with that unless inflation persists or maybe even gets worse. He's saying that his expectation is that inflation will probably start to get better as a result of their less accommodative monetary policy. As they stop increasing their balance sheet and as they start raising interest rates, he expects inflation to respond fairly quickly. I don't know why. It seems like everybody at this point should realize that it takes at least a year for monetary policy to have any effect on the economy. That means everything we're seeing right now is happening as a result of what was happening last year. All the monetary policy from last year is resulting in most of the economic impact that we're seeing this year. It takes a long time. But guess what? I still agree with Powell that we're probably going to see inflation let up a little bit over the next 6 months, not as a result of the current raising of rates, not as a result of the current asset purchase ceasing, stopping. I'm not expecting that or a balance sheet reduction will have any impact on the current inflation. I'm anticipating that the drop in the rate of growth of the money supply that started to happen last year will have an impact on inflation, and that the monetary policy they're engaging in right now is sowing the seeds for a massive deflationary crash that they're going to end up bailing out later on. Who knows? We'll see. That's my expectation. After they start raising rates, he reiterated, then we'll start reducing the size of our balance sheet. Then they'll start actually selling assets. So maybe some of that looks like they're not going to renew or mature or roll over some of that government debt that matures. They'll just, the federal government will have to get that new debt. If the federal government has to roll that over, they'll just get that from the open market from any other participants who want to loan that money to them. And then some of it might be sales of mortgage-backed securities, since those don't just mature as quickly as the treasuries do some of the shorter-term government debt that the Federal Reserve owns. And then again, always leaving the door open, saying, hey, we're going to be analyzing the incoming data. And right now, the big risk is war. The big risk is Ukraine. And I'd like to take a moment here, side note from the video. I think it's very important to point out that anti-war means anti-war. It doesn't mean anti-one war and for another war. One can at the same time be against Russia invading Ukraine and also be against the United States getting into a war with Russia. You can hold both of those opinions at the same time. This is something George Gammon tweeted about recently, because he's another big voice out there, a freedom, anti-war, liberty voice out there pushing the good news, and people are blowing him up for being anti-war on both sides, saying, "Oh, you're just a Putin supporter. Oh, you're just a or you're American. Either side. It's possible to be anti-war and not be for a different war. It's also possible to recognize that it might be the case that the United States doesn't have the military strength it thinks it does. And when you look back at the military conflicts that we've engaged in for decades now and looked at the disastrous results that has produced, the latest example, Afghanistan, that maybe we actually can't control what other countries do. That maybe, even if we try and stop it, it might just make things worse. And that maybe being the global policeman is no longer a job that the United States should be doing, because getting involved in the politics of the world, the border conflicts, might be none of our business. And again, this is no defense of the initiation of violence happening anywhere else in the world. It's not a defense of Russia invading Ukraine, but it's definitely a pleading call to not get pulled in, to get pushed in by the media blitz and propaganda from all around the Western world, a rallying cry to go to war, that NATO should go. The CNN just did a poll recently to see if people thought that NATO should go to war against Russia. Guess who NATO includes? The United States. Guess what that would bring to the doorstep in terms of possibilities? Nuclear war. And if you think Putin won't go through with that, he's said very clearly they'll use the nukes. That's all they have. Just look at the conflict with Ukraine right now and look how unsuccessful it has been from Russia's standpoint. Nukes are all they have. And they've stated very clearly, what use is a world with peace if Russia's not in it? So they don't care if the entire world ends as a result of nuclear warfare, because they won't be in it anymore. They don't care if they preserve the rest of the world's peace by not using their nukes, when it would result in their loss. So I don't think that's a bear we want to poke. I don't think that's a conflict that we want to risk having take place. And it seems like nobody out there, very few people I should say, have a head on straight and are saying, hey, United States should probably stay as far away from this conflict as possible, because it could literally, not figuratively, literally end life on Earth. And so that's a risk that the Federal Reserve is watching, to bring it back to what the video is actually about. That's the risk that the Federal Reserve is watching to see if they need to do anything different about their monetary policy. And quite honestly, if nuclear war breaks out, of war, just regular war between Russia and the United States starts, I don't think monetary policy is going to be our biggest concern at that moment. As always, really appreciate you guys. Thank you so much for watching. Have a great day.